Hi there, welcome to Neppyinvests. Probably the one thing you want to see happen to the share price of a company you hold is to watch it drop significantly in one trading day. On May the 6th, we saw this exact thing happen to three companies on the ASX. Appen and Nearmap's share price dropped by over 20%, while Adore Beauty's share price dropped by about 19%. What caused these significant drops in share price? So typically, it's going to be bad news released by the company. And when you look at Nearmap, their news was fairly obviously gonna lead to a share price drop. It was marked sensitive. Adore Beauty released a trading update, and on first look, it might have been perceived as positive, but as you dug deeper into the announcement, you did see some negativity in there. In the case of Appen, it was a complete different story. They released some notes to a presentation they were giving to the market. It was actually marked non-sensitive. And when a company releases a non-sensitive announcement, the ASX and the company does not expect the market to react positively or negatively to that announcement. But the market did exactly the opposite. It saw those notes from the presentation and it reacted quite negatively. In fact, it dropped the share price by 20%. So in this video, I'm going to go through all three companies and look at the announcements they released and talk about why the market reacted so negatively to it. And in the case of Nearmap, where the share price dropped 23%, I think the market completely overreacted. You could say the same thing about Appen. And in the case of Adore Beauty, I did think, because the sentiment in that company is negative right now, and the market did react probably the way it should have based off what I did read in the announcement. So let's get stuck into the first company, which is Appen. On May 6th, the share price of Appen dropped 21% in the one trading day. So what actually did lead to this huge drop in the share price? So the day before, on the 5th of May, the shares closed at $14.74. And I've been following the share price of Appen quite closely because it's in a well-defined downtrend. So I'm waiting for it to get into a consolidation pattern and potentially move into an uptrend. And that's when I might take a position. So I've been following the share prices quite closely. But I did not see the announcement that Appen released in the morning because it was actually marked non-sensitive. So Appen released the notes presentation now giving at the Macquarie Australia conference at 8:54. And again, it was marked non-sensitive. And that's why I didn't read it. I really only read or take notice to sensitive announcements. And the reason it was marked non-sensitive is I believe Appen and the ASX believed there was no new information within these presentation notes that should have caused either a sell-off or for the share price to rise. But the market saw this completely different. Now, within the presentation notes, the CEO was talking about a lot of things that had not changed within the day-to-day running of the business. There were two things that had changed, though, and these are the two things. Customers were changing their behavior due to online advertising impacts and regulatory pressure, and there was competitive pressure outside of relevance. Now, I do believe he actually did mention these things in the full-year presentation in February. That's why I think it was marked non-sensitive. But the market saw this completely different, and it sold off on the shares of Appen during the first 3.5 hours of trading. In fact, the share price dropped from $14.74 to $12 when the shares in Appen went into a trading halt because they needed to respond to an ASX price query. And I'll get into their response in the next slide. But sometimes when you do see an ASX price query and response from the company, you might see a rebound in the share price. But Appen's shares kept on falling during the day and they closed at $11.63. The other thing we saw during the day was a significant increase in volume. And that's a giveaway sign that someone or group of people within the market, so maybe quite a few fund managers, did not like this announcement and they were completely selling out of Appen. This is the ASX price query from Appen. And I just mentioned how Appen's shares had fallen from $14.31 to a low of $12.06 when they issued this price query to Appen, and they also mentioned this significant increase in volume. So when ASX give a price query to a company, it's usually based off the share price moving up or down quite significantly, but they also need to see a massive rise or in volume. So we did see that massive rise in volume with Appen's shares. And Appen's response was interesting because they said the information within the announcement was consistent to what they stated in the financial year 20 results. So they were surprised that the market was reacting this way. And then they surmised that maybe it had something to do with the recent share price decline in US tech stocks, which is causing a negative sentiment in Australian tech companies, which is in a way true, but doesn't really explain why the share price dropped by 20% in the one day for Appen. It doesn't really explain that. So the market was seeing something in this announcement that the market didn't say, or the management of Appen didn't say, and even the ASX didn't say, and even I didn't say really, because there was nothing really new in this announcement. So it was a bit of surprise the way the market reacted. This is the one-year daily chart for Appen. Now, from May 2020 to August 2020, the shares for Appen were in a nice, well-defined uptrend. So if you're a shareholder at this point in time, there's no point selling out because there were no sell signals. So what you want to see is some sort of catalyst to shift the sentiment from positive to negative. And the first catalyst we received was in August when the company released the half-yearly results. We can see a massive spike in volume and the share price decreasing. So that was the first sign of a bit of trouble in Appen. And we started to see the share price fall backwards from there. Not a really well-defined downtrend had developed. Shares were going sideways or slightly down. But when the company released a trading update, which was a downgrade in December, the shares at that point were in a well-defined downtrend. In fact, I would say the market anticipated this downgrade before the company released it, because we did see the shares drop quite significantly leading up to this downgrade. And from then, which the share price was around $27. The shares have just kept on falling. Once we did see the shares try to rally in February, and just before they released their full year results towards the end of February, the share price, or the market, anticipated some bad results there, and we did see the shares drop from $25 to $19. And then they released their full year results, and we saw the sell-off continue in Appen's shares. Then we started to see the shares go sideways a little bit, but still a well-defined downtrend. And we know it's a well-defined downtrend just by looking at the moving averages here. So I've got the 10, 20, and 50-day moving averages, and the share price ever since November has been below the 50-day moving average. So at this point in time, I'm keeping a close eye on Appen, and what I want to see is some sort of consolidation, because until you see some sort of consolidation, which is the share price just going sideways for a period of time and the moving averages coming together, until we see that, we don't know how low the share price will go. Why does it pay to remain patient in these sort of circumstances when the share price of a company just keeps on dropping? Humans have this problem of recency bias. When we see the share price of a company drop, we think there's good value there because the share price is lower than it was a few weeks ago. And that's a completely flawed way of thinking. So what I'm going to show you is some hot copper comments to try and reinforce this belief that sometimes when the share price is dropping, it doesn't mean that represents a good time to buy into a company. So if we go back to August 2020, when they released the half-year results, there was this comment from someone. Don't worry, my friend, I've brought around $120,000 over the last 2 days. The red is uncomfortable, but think about it as an opportunity. Again, they saw the share price decreasing from what it was a few weeks ago, and they thought it represented good value. Now, if they've held on to those shares from then till now, they've seen that $120,000 of the shares in Appen decrease to $40,000. So that's an $80,000 paper loss thus far, and they're going to have to wait until the share price goes back up to that level, if it ever does. When the company released their trading update downgrade in December, we had this comment. I don't try and time the very bottom. That's a fool's game. Very wise thinking that it's almost impossible to time the very bottom. You should not try to time the bottom. You should try to time when the sentiment shifts from negative to positive. When the company released that trading update downgrade, that was a continuation in the negative sentiment in Appen. No reason to buy into the company. Share price was in a well-defined downtrend. Sentiment was negative. Don't try to time the bottom. But this person, again, was showing recency bias. They saw the share price decreasing from what it was before, and they thought it represented good value. And you can see that in the next part of their comment. Today's price, 9 to 12% drop, represents a good time to buy in or top up. No, it did not. It represented a bad time to do those two things. And then, when the full-year results were released by the company, we saw this comment: like clockwork, easy hold, easy money. Poor retail got conned as always. Let there be lessons learned. Well, I hope whoever wrote this comment learned their lessons. Now, I see this comment a lot. People believing, well, the share price is dropping, it's being manipulated by the big players, and any retailers who are selling out are getting conned. Well, they would have sold out about $18, and the share price has continually dropped since then to $11.63. So whoever wrote that comment, I believe they were probably conned by holding or buying into Appen at that point in time, because again, the share price was dropping quite significantly, well-defined downtrend. No point in buying in, just remain patient. Even on the 6th of May, when the share price dropped 20%, we saw this comment: if it gets to $13.50, I am backing up the truck. And the share price just kept on dropping. Again, remain patient. You can back up the truck when the share price gets into a consolidation period and then breaks out because of positive news. That's the time to buy into Appen. That represents the lower risk buy. And the whole point of investing is to lower your risk and maximize your gains. All these people who've been writing these comments are doing the complete opposite. Next, I want to talk about Nearmap, and this is a really interesting case because we saw Nearmap release 2 announcements in consecutive days. The first announcement was actually a really positive one, and they had actually increased their financial year 21 annual contract value guidance from a range between 128 and 128 million to 128 to 132 million. And the market reacted just the way it should. Shares increased by 15%. In fact, I put Nearmap on my potential breakout watch list because this is exactly the sort of announcement I am looking for every single day. Then the next day, they released another announcement which was slightly negative. Nearmap were made aware of a complaint in the United States District Court. So they were being sued by another company. And the way the market reacted to this announcement was mind-boggling to me. Shares dropped by 23%. I think, in my opinion, the market completely overreacted to this news. And you can just see the power of fear in this one announcement. The market does not like risk. And they saw this announcement as an added risk to the company, and that's why it sold off. And this is the exact reason why when you see market corrections, they can be quick and sharp compared to recoveries. Although the COVID-19 recovery was quite sharp, that was, in my opinion, a bit of the exception. Finally, I'd like to discuss Adore Beauty, and this is their chart since they IPO'd in October last year. Not really the sort of company you would have wanted to bought into the IPO and have held on since then, because the shares have dropped almost 50% since then. So if you do like this company, again, just remain patient. We don't know how far the shares will have to fall. They've dropped 50% since they IPO. They could drop another 50%. We just don't know. Nice downtrend right now, and just wait until the shares consolidate or you see a new uptrend developing. So what caused this 19% drop in the share price on the 6th of May? Well, they released a trading update. And this is the sort of announcement I always look every single day on the ASX. Trading updates, profit upgrades or downgrades are the thing to watch out for because they are the most powerful sort of announcements. We see significant drops or rises in the share price based off these announcements. So in this trading update, they gave us guidance for revenue and active customers. Now, in isolation, it actually looked pretty good. Revenue, 39.4 million, up 47% compared to the previous corresponding period. And active customers, 687,000, up 69% to the previous corresponding period. But noted was they did not compare the results to the previous quarter, which is okay because the previous quarter should have been their best quarter. So in isolation, you might have expected these numbers to be quite good. Those numbers are up compared to the previous corresponding period. But what I did is I went back to the half-year results, and I think the market also had some expectations based off the half-year results. And if you look at the half-year results, you get a different picture. In the half year, revenue was 96.2 million. So they're well off at this point in time, getting towards that revenue number. But the really important thing here was the active customers had actually dropped from 777,000 to 687,000. So even though they increased compared to the previous corresponding period, quarter on quarter, they actually decreased. And I think this is what the market saw, and this is why the share price sold off in Adore Beauty. And that's all for this video for Appen, Nearmap and Adore Beauty, why the share price dropped 20% in one day. I did this video just after open on the 7th of May, and I do expect the share prices of all three companies to rebound on trading today and maybe the next few days, particularly Appen and Nearmap, because I do believe the market has overreacted in both those companies. With Adore Beauty, I think there are some problems with that business, particularly when you look at the share price action since they IPO'd. So I'd be wanting to wait for that company, a bit of a consolidation in the share price, and a new uptrend developing. But that's also true for Appen. Their share price has been in a well-defined downtrend since about November last year. Nearmap, really, there's no signal either up or down with that company, but I do believe the market completely overreacted to their announcement on the 6th of May. If you have any questions about these companies, if you think I've said something completely wrong here and you'd like to correct me, make sure you leave a comment in the comment section, and I'll reply to any questions you have or any comments you have in the near future. Otherwise, I'm not a financial advisor, so if you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's all for this video. Have a good day. Bye.